And one of the things that I've been talking about for a long time is that in the past, before the COVID, everyone always put bonds into their portfolio as a ballast to their stocks. And if
Yes.
you think about it, it's been a terrific trade. You know, guys like Ray Dalio have made their fortunes on the risk parity, the idea that you can lever up a stock portfolio with bonds, because when stocks are doing worse, the bonds are going to be doing well. And in this meantime, we've had this, 40-year move that's from 15 down to basically 50 basis points. It's been an absolutely unbelievable trade, but this has all occurred in a period of disinflation. And if you look over a longer period and you go back 100 years, you'll see that during periods of inflation, bonds and stocks are actually positively correlated instead
Right.
of being negatively correlated. And my line that I always said was that be careful about assuming that the bonds will be a ballast in your portfolio. I think they could be the anchor that drags them down. And we just saw the first worst 6 months of the bond market since like the 1800s or
Yeah.
something. It was some crazy number. And so, do I think that bonds are going to continue to, suck so bad? I don't know, Brent, but I do think that those are expecting them to be a top performer, and that idea about using it as a ballast is probably gone, and that you should be careful about, mixing stock and bond portfolios, because I think that there's a potential that eventually it gets worse. But in the meantime, I suspect that what we'll do is we'll get a bounce, we'll get a flattening of the bond market. Move will come down.